Pablo, good to see you. How you doing? How you been? How's things, Pablo? JP, good to see you as well. How you doing? Evening, good to see you as well, brother. T, good to see you as well. How you doing? How you been? Evening, Miles and CMF. Tor, good to see you as well. How you doing? How you been? Good evening, Miles. Bull XRP, good to see you as well. How you doing? How you been? Evening, Miles. How's things? Artistic things are great. How's things with you? Showtime. Let's go. T-Rex. Good to see you as well. How you doing? Good day, Miles. Mike, good to see you as well, brother. How you doing? Hello, brother Miles and CMF. Comatose, good to see you as well. How you doing? How you been? Okay, just tagged the live as well. Ready to go. Evening, Miles. Hope you had a good day. It was a very busy day, is what I would have to say. Very busy day, but good to see you as well, John. How you doing? How's your day? Evening, Miles. Good to see you as well, Jack. How you doing? What's up, Miles? What's up, CMF? What do we have today? Mixture of news, as always, to go through on tonight's live. We have essentially Fed news to go through, some international news to go through. Also, Restream, by the looks of it, still hasn't fixed the viewer count. For some reason, it shows it's 5 people watching. In reality, it's not 5 people watching. I really don't know what's happening with Restream so far. But anyways, putting that all to one side. Welcome to the CMF Live. If you're watching this for the first time, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world, completely transforming into a digital space. We also do Q&As in this live as well, which means if you have any questions throughout the live show, put it down in the comment section. More than happy to help you out. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. I also want to say thank you so much to everybody who's watching right now from the CMF who has already liked and retweeted this live. If you're watching this on X, if you're watching this on YouTube, thank you so much to everybody who's also liked the live as well. Put a comment outside live. If you haven't put a comment or retweet or even liked the live, CMF members, please like, retweet, and put a comment outside live. Also, hashtag whoever you want inside the comment section. Now, on tonight's live, we're going to go through a mixture of news as always. We're going to go through some Fed news. We're going to go through some Trump news. We're going to go through some Bitcoin news. We're going to go through some partnership news, some announcement news, some rumors. Not some, just one particular rumor, which we're going to discuss at the end of the live. We're going to go through some Ripple news, as always, on tonight's live. So, just as always, some international news, some mixture of news to go through. A lot of things have been happening around the world, which we're going to be covering on tonight's live, which is episode 361 of the CMF Live. We're 4 episodes away from a full year of a live show, which is incredible. Now, before we go through the first news, which is regarding the Fed, let's go straight inside the comment section first, and then we go straight into the first news. Also, once again, I don't know why Restream is not showing the correct count viewership. It's showing 16 people are watching. There's obviously more than 16 people are watching, but I don't know what's happening with Restream. Since yesterday, it's showing the wrong viewer count. I don't know why. Hopefully it'll be fixed by tomorrow or the day after. Now, let's go inside the comment section first before we go for the next news on tonight's live. Let's see where we're at. We were at good evening, Miles and CMF. Funky brother, good to see you. How you doing? How you been? Do you have any news on Kronos today? Yes, I do. Regarding Kronos, we're gonna go through that on tonight's live as well. RLUSD is climbing up. Let's go tall. Hi, Miles, the CMF family. Let's go for facts today. For facts talks. Good to see you. Hope you had a productive day. Let's go, Carl. Good to see you, brother. How you doing? I did. I just retweeted on X. Thank you so much, Funky brother, for retweeting. Thanks so much to everybody else on the CMF who's already retweeted this live on X. If you watch us on X. Good evening, Miles. How are you doing? I'm doing great. Callie, how you doing? How's things? Good evening, Miles and family. Let's go with the brilliant info. Let's go, Ian. How you doing, brother? How you been? Good evening, Miles and CMF. Lena, good to see you as well. How you doing? Happy full year of a live show. Let's go, Carl. Now, first news on tonight's live is regarding the Fed, which is why the crypto markets, some crypto projects slightly started to creep on the uptrend. Not by a lot, but by even a small amount. But here it is. Apparently, Trump is getting very close to removing one person from the Fed, which is another person that essentially makes Jerome Powell sit in a much more weaker position, because 2 people already inside the Fed are in favor of Trump and are in favor essentially of rate cuts. They were in favor of that months ago, and they still are. And Trump looks like if he can't remove Jerome Powell, he is removing everybody around him and replacing them with people that have the same vision as Trump's administration or Trump himself. So here's the news. The Fed made its first official statement after President Donald Trump dismissed the Fed's board member, Lisa Cook, indicating essentially that the matter would be taken to the courts. A Fed spokesperson made the following statement in a written statement. Under the Federal Reserve Act, Congress clearly provides that members of the Federal Reserve Board of Governors serve long, fixed terms and can only essentially be removed by the president for good cause. Board members' long terms and protections from dismissal are critical safeguards that ensure monetary policy decisions are based on data, economic analysis, and long-term interests of American people. The Fed will continue to fulfill its duties in accordance with the law. Governor Cook, though essentially is a personal attorney, stated that it will immediately file a lawsuit against the action. As always, the Fed will comply with the court's orders. Cook's dismissal stemmed essentially from a criminal investigation launched by the Justice Department last week. Federal Housing Finance Agency Director Bill also accused Cook of making false statements on mortgage applications. According to Bill, Cook attempted to obtain lower interest rates and favorable loan terms by declaring on documents he signed for properties in Michigan and Georgia that each essentially property was his primary residence, and the document in question were allegedly signed before Cook took office in the Fed. Trump cited these allegations in a letter to Cook on Monday night, announcing his decision to dismiss him. Cook, in a statement the same day, said, "President Trump claims he removed me from office for good cause, even though there is no legal reason to do so. He has no such authority. I will not resign. I will continue to do my duties to help the American economy as I have since 2022. Bold statements from both sides. Trump stating essentially that Cook has been falsifying essentially mortgage claims while being a Fed member. And on the Fed side, essentially Cook stating that he has done nothing wrong and that he's been helping the American people since 2022. First of all, the Fed prints too much, which has devalued the dollar if you really think about it. Second of all, we've been expecting rate cuts that could help the American people, which the Fed refuses to do so because of Jerome Powell. So the idea that the Fed is in favor of the people, it's helping the little guy succeed in life, absolute load of baloney, to be fairly honest. Second of all, has he committed a crime? Well, according not just to Trump or Trump's administration, which most Americans don't trust for some oddly reason inside the United States, but even according to the Justice Department, Tim essentially has been, doing some sort of fraud behavior when it comes to his mortgage papers. Nevertheless, this is actually good news, because even if we can't remove Jerome Powell, at least we can pick them essentially one by one and dismiss them from the Fed and replace them with pro-crypto members and people who have the same vision as one, Trump's administration, Trump himself, and two, as the crypto space. So everybody inside the crypto space is extremely excited on the matters of that Trump is removing one by one Fed members and turning them pro-crypto, turning them towards rate cuts and so on. So if he's willing to fight this out in court, good luck to him. But it seems like the Justice Department has evidence on this man of doing some sort of fraud allegations when it comes to mortgages. Now, moving on from that, which has helped the crypto market space pick up just a little bit of excitement, to Bitcoin. Before we go through that news, let's go inside the comment section first, and then we'll go straight into the Bitcoin news. Let's see where we were at. Miles, I left really nasty and truthful comments yesterday to this idiot, XRP hater on TikTok. He was talking rubbish regarding Chainlink and SPI. I think he's missed out on XRP when it was 20 cents. Fair enough. Good evening, Miles and CMF Money. Good to see you. How you doing? How you been? Mike, let's go. Hello from Turkey. How you doing, Tuma? From Turkey. Bitcoin. Bitcoin faces liquidations while Coinbase demand essentially shows strength. Bitcoin is under serious pressure right now after falling below the $109,000 level. The drop essentially triggered massive liquidations essentially across the market. According to CoinGlass, over $700 million worth of long positions were wiped out in just the last 24 hours. Some traders even point to nearly $930 million in liquidations since the sell-off started. This essentially relentless liquidation wave has left bulls scrambling essentially to protect their current support zones. Analysts warns that Bitcoin must hold 106 to 108,000 range or risk deeper corrections towards $100,000. The last decline did not come out of nowhere. A Bitcoin whale sold 24,000 Bitcoins worth more than $2.7 billion in a single move. That dump pushed Bitcoin to a 7-week low and slashed $205 billion from the total crypto market cap in just one day. The whale essentially triggered sell-off, sparked a chain reaction across exchanges, with traders forced to essentially exit positions at a loss. Altcoins also suffered even sharper losses, with Solana, Dogecoin, and Cardano all plunging by double digits. Despite this, some analysts stress that the current 12% correction is still smaller than Bitcoin's historic crashes of 2017, which is true. 100%. And then essentially between 2017 and 2021. Still, the sheer size of the whale's move has left traders cautious about what could come next. Are more wallets that have been essentially dormant for about a decade going to be turning on? And the comment section just disappeared. 1 second, everyone. I don't know why Restream is doing this. Okay, the comment section is back. The good thing is I think I got through everyone's comments before it disappeared away. Someone said Trump. I think it was DD, Trump 2024, Trump 2028. Let's go. Good evening, Maus and CMF. Orphan, good to see you as well. The entire comment section again disappeared. I don't know why this is happening, but the only comment I can see now is starting from Golden Dragon's comment, which says hi Maus and CMF. Golden Dragon, good to see you. How you doing? Now, while the sell-off essentially rattled the market, signs of recovery are quietly emerging. The Coinbase Premium Index, essentially, which tracks the price gap between Coinbase and Binance, flipped positive again. This shift essentially suggests that the US-based demand for Bitcoin is returning after a week of essentially weakness. After weeks of essentially weakness, traders often see a positive Coinbase premium as a bullish signal because it shows American investors are still buying Bitcoin at higher prices. Coupled with surprises and inflows into Bitcoin ETFs, the market may essentially be setting up for a rebound. Now, seasoned traders are pointing out that the Bitcoin's current moves look very early similar to its Q2 retracements earlier this year. Back then, essentially, BTC peaked near $112,000 before crashing to around $98,000. And analysts essentially also from Crypto Quant highlight that today's charts show the same lower levels and false essentially signals happening. Every time traders believed the run was over, Bitcoin managed to bounce back stronger. The uncanny resemblance has some market watchers betting on short squeezes. All the book's data show also heavy short positions stacked above $114,000. If Bitcoin rallies back to that zone, these shorts could be liquidated, fueling a rapid, much more movement higher. The Bitcoin essentially market is now caught between fear of further liquidations and a hope of a rebound happening. On the downside, traders eye $100,000 as a key safety net with deeper essentially support near $93,000. On the upside, a quick return to $114,000 could flip this essentially sentiment overnight. The deciding factor may be whether essentially whales continue dumping or set back from the market. Coinbase flows and ETF demand suggest stronger buyers remain in the background, waiting for opportunities. For now, Bitcoin's path forward rests on whether the bulls can defend its support levels and turn the latest pain into fuel for the next rally. While another Bitcoin wallet that decided to wake up after years of no movements whatsoever decided to sell its entire Bitcoin portfolio and purchase Ethereum and then stake it. If I'm not mistaken, it was roughly about 544,000 Ethereum that was purchased and is now staked. Seems like some people are moving away from Bitcoin to Ethereum, but it tends to be whales. Doesn't tend to be essentially institutions, but we don't know who the wallets essentially belong to also, to be fairly honest. Now, moving away essentially from Bitcoin's up and down situation, JP Morgan is what we're going to talk about next. Apparently, JP Morgan has decided to invest into another crypto project. And this is a pretty much an AI crypto project. So if you are somebody out there that wants to be involved in the AI crypto space and just doesn't know which AI crypto project is the best one, well, this one maybe could be a viable asset to look into, not to purchase whatsoever, because JP Morgan could pull out their money, or the news could just be essentially false. But here's the announcement, essentially, is what's going around. San Francisco-based essentially Numeri LLC announced it has received an investment commitment of up to $500 million from the asset management arm of JP Morgan Chase and Co. to be deployed over the next year. This development has the potential to double the hedge fund's current size, which currently manages approximately $450 million. Founded in 2019, Numeri builds its essentially investment strategies using trading ideas provided by freelance financial experts. These experts are essentially rewarded with the firm's native cryptocurrency, Numeri NMR, the ticker, which then essentially they use to demonstrate confidence in their predictions. JP Morgan's interest in Numeri increased after it essentially achieved a 25% return in 2024 and 15 essentially consecutive months of positive performance. After a 17% loss in 2003, the fund updated its strategy to include a system that quickly essentially exits unsuccessful trades. People usually want to see a track record, said Numeri founder Richard. If you're doing something unusual like we are, the interest comes even later. He also compares Numeri to essentially multi-strategy hedge funds, like essentially minimal managements, but says the key difference is cost efficiency. So JP Morgan has taken an interest in another crypto project except Ethereum, and that crypto project is NMR, is the ticker. They've essentially pledged $500 million towards this crypto project. So if you do want to go and check it out, the ticker is essentially NMR. It's JP Morgan, by the looks of it, newest golden goose. Now, moving away from that to Trump, specifically Trump Media. Trump Media and Crypto.com launch a $6.4 billion Crow treasury, which is massive if you really think about this. So if you are somebody that's holding Crow and you've been waiting for the longest time for some sort of movements in Crow, well, Trump Media and Technology Group Crypto.com and Yorkville Advisors have joined forces in a landmark initiative launching a $6.42 billion treasury built entirely with Crow, the native token of Crypto.com. The collaboration essentially isn't just about capital, it's about influence. Together, they now control roughly 19% of Crow's total essentially circulating supply, signaling a broad streak stake in the token's future. Such a massive reserve has the potential to affect Crow's liquidity, governance, and long-term price stability. The Treasury aims to support cross-platform essential initiatives, fund innovation in digital assets, and possibly strengthen political media alignments with blockchain adoption. With essentially nearly 1/5 of Crow's supply now managed in a centralized treasury, market participants are keeping a close eye on the implementations. While this essentially constellation may provide stability and institutional confidence to Crow's network, it could also lead to concerns about market control and token flows. As I've said for the millionth time, to be fairly honest, the idea of a fully decentralized world is just never going to exist. There's always going to be elements of centralization going forward in the digital world. If deployed wisely, this treasury could fund essentially projects that bring real utility to Crow's ecosystem, such as Web3 applications, NFT marketplaces, or blockchain-based essentially media services. Trump's media essentially involvement suggests a merging of political messaging with decentralized technology, which could usher in a new use case, essentially, or controversies. The formation of this Crow treasury could be a double-edged sword. On one hand, it indicates a strong institutional belief in the token's future. On the other hand, a large holdings by a few entities could raise decentralization concerns. Traders, developers, and investors will be watching for how these funds are deployed, whether into staking, streak partnerships, or ecosystem developments. As crypto essentially matures, collaborations like this show that Crow is not just a payment token, it's becoming a financial instrument with a much more broader political implications involved. So, Trump Media decides on a $6.4 billion treasury for essentially Crow token, which they control now at roughly about 19% of Crow's essentially circulating supply. Trump's essentially media company. which is massive. It brings a lot of confidence to grow. It brings a lot of confidence towards the crypto space if Trump's administration decided to do this. But again, if you are someone who is holding Crow and you want to finally see some sort of major announcements regarding Crow, well, this is quite a big one, to be fairly honest. Now, moving away from Crow and essentially Trump media to blockchain and public data. US Commerce Department to publish data on blockchain. This is massive news. It brings so much credibility to blockchain and also making things more transparent where everybody can access to it 24/7. It's just is what we need in this world. We need transparency back in this world because there's too much behind closed doors and private conversations and so on. And you know what I'm talking about. The US Department of Commerce has announced plans to publish official economic data, including GDP figures, on a blockchain. This represents essentially a pioneering step in federal data management, with Secretary Howard Lutnick spearheading the project right now. This initiative aims to leverage secure and decentralized infrastructure to enhance transparency and accessibility to public data regarding this. The move follows a groundwork laid by former Secretary Gina and concepts previously explored by Elon Musk Doge department. However, neither Elon Musk nor his department is actively involved in this current project. During a White House cabinet meeting, Howard Lutnick stated the Department of Commerce is going to start issuing its statistics on the blockchain. Because you are the crypto president, we're going to make that available to the entire government. So all you can do it. So essentially all of you can do it. We're just ironing out all the details right now. The initiative ties into the broader efforts to modernize government data systems. However, as of now, there are no official posts from LinkedIn or related parties on Twitter or LinkedIn regarding this project. There is also no public documentations or even white papers available so far. The legislation named Deploying American Blockchains Act of 2025 formalizes federal spending on blockchain infrastructure. This is part of a broader plan to integrate decentralized technologies into government data processes, and several key private sectors and partners, including IBM and AWS, are collaborating to build this necessary infrastructure. The United States has allocated federal infrastructure spending on blockchain reaching $19 billion, with projections climbing to $12.9 trillion by 2032. These figures reflect a growing institutional trust in blockchain technology. The announcement does not specify using Ethereum or Bitcoin as hosting platforms, yet this shift implies an official endorsement of decentralized blockchains. The focus is primarily on layer 1 chains, essentially, is what they're suggesting. We don't know because we haven't seen the white papers. The policy does not prompt essentially significant on-chain shifts in liquidity or staking flows, as assets remain separate from financial custody in the reporting process. The primary impact is anticipated on governance and protocols that support government-validated information flows. The government has not listed specific essentially governance tokens or DeFi protocols that will be utilized. However, tokens used for data verifications and auditing, such as essentially the crypto projects that that are based inside the United States, could be the ones that are chosen for this matter. The move, essentially, the relevance of the blockchain-based data verification and storage solutions, while Bitcoin and Ethereum values are not directly affected, the perception of blockchain utility is likely to improve because we're heading towards utility. And this is a brilliant move coming from the government to bring essentially all that information onto the blockchain, bring government data onto the blockchain. It adds a lot of credibility towards the blockchain space, where institutions will look at the government, the US government, using blockchain for data storage, transparent data storage, which should essentially send a massive ripple effect to the entire institution, to the entire institutional sector, essentially, that they could also be using blockchain technology. If the government can trust it, and so can institutions for their data storages. The US Treasury and physical servers have previously experimented with blockchain to track spending. However, using blockchain for live, essentially statistical reporting represents an unprecedented scale in G7 countries so far. But so far, the United States seems like it's taking the step forward for government data on the blockchain, and they're calling it essentially the Deploying American Blockchains Act of 2025. It's massive news coming essentially from the United States. They haven't mentioned any crypto projects they've chosen as the backbone for data storage in any sort of a way. I'm guessing if they do choose any blockchain, it's going to be an American blockchain. preferably. I don't think it's going to be Bitcoin by a long shot because it's just going to slow down the network. They tried to do NFTs once on the Bitcoin network, essentially, and that went very south. And the project ended within 2 months because the Bitcoin network got congested. So imagine government documentations on the Bitcoin network. It's never going to happen. But American blockchains, I could see a possibility of one of those blockchains being chosen as that backbone. IBM is involved. AWS is involved. IBM is a Ripple partner. Just want to point that out. Now, Yellen is what we're going to talk about next. Janet Yellen highlights the Fed's independence as politically rooted. U.S. Treasury Secretary Janet Yellen emphasized the Federal Reserve's independence is rooted in political, essentially, arrangements, highlighting public trust as its sole credibility source as of August 27, 2025. This statement underscores the potential implications for financial market confidence, particularly affecting risk-on assets like cryptocurrencies, which rely on central bank stability and credibility. Janet Yellen's statements underscores that the Federal Reserve's autonomy is anchored in a political, essentially, arrangements, highlighting the integral roles of the public confidence in maintaining financial system credibility. These remarks align with her past advocacies for the Fed transparency and independence for economic stability. Public perception of a central bank independence can influence market behaviors, particularly concerning risk-on assets like Bitcoin and Ethereum. It's interesting that Janet Yellen has called essentially Bitcoin a risk-on asset because according to Michael Saylor, it's a risk-off asset. With no immediate shift on on-chain data tied to this essential recent statement, historical patterns suggest the possibility of capital flows into decentralized assets during periods of fiat currency uncertainty. As the chair of the Federal Reserve, I insisted on essentially the Fed's independence and transparency because I believe it matters for financial stability and economic growth. Greater central bank independence is associated with greater price stability, which contributes significantly to long-term growth, said Janet Yellen. U.S. Treasury Secretary. Market reactions have been generally cautious. Notably, no significant essential comments were made by her key essential opinion leaders in the crypto industry. Nonetheless, the market history often links periods of monetary credibility and concerns with increased interest in decentralized assets. Potential long-term shifts in investment strategies due to such developments and historical patterns confirm that declined trust in monetary policies could drive further adoption of decentralized financial solutions, reinforcing the perception of Bitcoin as a hedge against inflation. While immediate repercussions remain limited, the focus on central bank independence could fuel ongoing essential discussions about the role of cryptocurrencies in modern finance. I agree 100%. The Fed should be 100% transparent. They should not be aligned with any political party. Unfortunately, the Fed is aligned with a political party, and it's not the Trump administration. It's the other party that isn't president or doesn't have an administration, which is ridiculous for Jerome Powell to be choosing the other side when one side, it's the president of the United States with his administration, and the other side is just a bunch of morons and senators who try to use their power plays. But yeah, I agree 100%. The Fed should be transparent. The Fed should not be politically essentially pushed, but unfortunately they are. As much as Jerome Powell likes to state, he's not a politician. He's a Fed member. He's a Fed chairman, and he's not aligned with any political party, but he is, and it's so obvious that he is. Now, before we go through the next news on tonight's live, let's go into the comment section first. Let's see what's going on there, then we'll go straight to the next news on tonight's live. As I said previously, if you do have any questions or comments, put it down to the comment section. More than happy to help you out. So let's hear at good evening, Miles and CMF. How you doing today? Carlos, good to see you. How you doing? Let's go. XRP, how you doing? Hi, Miles and family. Alex, good to see you. How you doing? How you been? Michael, I can't Michael, is it possible for you to type it in English? The unfortunate part is I can't translate that on Restream. So if it's possible, Michael, could you write your message in English? Has Swift been doing trials of XRP and HBAR? There are paperworks that suggest that Swift has been doing essentially trials with XRP and HBAR, but the paperwork is extremely old, to be fairly honest. So yes and no, because we don't know what they're doing in 2025. The paperwork is extremely old. Now, Fed rate cuts. Speculation sparks crypto market volatility right now. The Federal Reserve Chair's Jerome Powell's speech at the Jackson Hole, which we've talked about essentially the past few days, his last ever Jackson Hole, The potential of that rate cut still coming in next month is still weighing in on the market space. The market wants to move up on the uptrend ever so slightly, but it can't because random whale wallets from essentially Satoshi's era are turning back on and dumping on the market space. And unfortunately, because we still don't have a set of rules and regulations, and all we have is just the Genius Act, which is more in favor of stable coins. We don't have regulations in place that can help the rest of the crypto space to go towards utility and decouple themselves from Bitcoin. So every time a random wallet decides to, wake back up after a decade and dump on the market space, it affects Bitcoin's price, which affects our crypto prices, our altcoin prices as well. The faster we get regulations, the faster we can move into utility, and the faster we can get away from Bitcoin's, dumping price moments. Rate cut expectations may fuel crypto rallies, but also pose correction risks. With whale activity and macroeconomic uncertainties affect the market dynamics. The crypto market right now is extremely manipulated. Too many people are getting liquidated. Either way you look at it, if you try to build a long position, you're more likely to get liquidated. If you try to build a short position, you're also more likely to get liquidated. The house is trying to win as much as it can. By the house, I mean the exchanges. They're trying to win as much as they can before we go into the month of a possibility of a rate cut and into the month of the Clarity Act passing through, which are two big, huge announcements. But the house wants to win before all that happens. And that's why we have such a volatile market stage right now. Speculation driven by Federal Reserve rate cut expectations has impacted the dynamics of the crypto market, leading to noticeable volatility and mixed reactions among investors. With Jerome Powell's recent comments suggesting a possibility of essentially a policy shift, market participants have become more speculative yet cautious, because imagine if we go into next month and Jerome Powell all of a sudden decides, nope, no rate cuts. That will cause the crypto market space to go down again for minimum 24 hours, maximum 48 hours before it adjusts and comes back up again. But yeah, imagine if we do go into next month and Jerome Powell decides to just mess with the whole market space and just come out and go, no rate cuts still whatsoever. That's going to pressure the market down. But what is going to bring the market back up is going to be that Clarity Act. Something has to always push the market down, and something has to always push the market back up. That's just how it works inside the market space. Nothing continues going down, nothing continues going up unless it's a meme coin, which just goes up and comes right back down. But something has to always push the market up, and something has to always push the market down. Now, that could be based on essentially macroeconomic events, that could be essentially geopolitical tensions, that could be regulations, that could be so many factors. But there has to always be a segment of something pushes the market down, something pushes the market up, something pushes the market down, something pushes the market up. And it's mostly based on the news that's essentially coming out based on contracts and essentially partnerships and licensings and regulations and geopolitical tensions and tariff situations. And in this case, Jerome Powell just being an absolute tool by not doing his job. But again, in between these types of movements, the market, the house has to win. Otherwise, everybody will just put essentially 250x leverages on positions for any crypto project just to go up, because we know what's going to be happening next going forward. We know essentially America is going to become much more crypto friendly as it is still now. It's going to get a lot more crypto friendly going forward. I mean, they're about to be sharing their government data on the public blockchain. That shows that they have confidence towards the crypto space. And the only reason they're doing it, the only reason the Congress even announced it, is because they said, we have a president who is a crypto president, therefore the government's data should be on the blockchain. I mean, it shows the amount of confidence they have towards crypto space. We know where the market's supposed to be heading. We know we're going towards regulations, more institutional money, 95% chance, according to Eric and James from Bloomberg ETFs, they get approvals for ETFs for altcoins. So we know there's so much positivity to go forward, but the market somehow isn't going up, even though there's so much positive news ahead of us. But the market isn't going up. The market's just been manipulated to go down and then up, down and then up. Just balance itself here going forward. And that's because the house needs to win. That's just how it is. If the house doesn't win, then they can't be paying out 24/7 like their cash points, like their ATMs essentially. In other words, everyone putting 250x leverages because the market's bound to go up day after day. That can't happen because the house has to win in between. Otherwise, the house can't be able to pay you. Let's just be honest with ourselves. Now, financial implications are evident as institutional investors rotate capital, particularly from Bitcoin to Ethereum. This shift reflects strict responses to anticipated rate cuts, with some expecting positive essentially outcomes for altcoins in the short term. Coinbase essentially shares further insight on cryptocurrency investments in the light of these developments. Regulatory essentially leaders remain silent on immediate rate cut effects, increased essentially strict adjustments by institutions showcasing the market sensitivity to Federal Reserve actions. Insights essentially from the analyst perspectives reveal strict concerns about the market reactions to the potential Fed movements going forward. Insights from the historical Fed policies reveal that while rate cuts often boost crypto markets, they also bring correction risks if inflation surprises. Data suggests that past trends may reoccur, with analysts urging a careful watch on macroeconomic changes. Also, something you should know, today on the news, in the Daily Mirror in the United Kingdom, they started saying essentially everybody in the UK should prepare for a war. Not even joking. On the Daily Mirror today, on TikTok, on their own official news channel in the United Kingdom, they posted essentially that the UK citizens, the British citizens, should prepare for a war, and that everybody should go out shopping for food supplies and water supplies for a few days at least, because a war is coming in towards the UK. They're calling it the World War III. It's never going to happen. World War III is never going to happen. Fear-mongering will always happen. But I've said this many times, the idea of a World War III where, because we live in such a very different time where it's not sticks and stones, people throwing sticks and stones at each other and so on. We're talking about, nuclear facilities. So if we go into a World War III, everybody will be flatlined, because every country pretty much has some sort of either nuclear weaponry or they have some sort of capabilities of mass destruction, which means, honestly, every country will pretty much get flatlined if that even happens, which is stupid to even have a World War III, because what's the point if everybody gets flatlined? Because that's what exactly will happen. If one country launches nuclear, essentially warheads, the other country will launch it too. And all you will see is just missiles and nuclear heads dropping everywhere. Everybody will essentially, you know where I'm going with this. So the idea of a World War III is just never going to happen. Because even if they're trying to do a World War III war to go into a next financial world, that's also ridiculous too. Because so much will be destroyed going forward. That makes no sense whatsoever. Fear-mongering makes a lot of sense. The idea that we're going to go into a war, that makes sense, because that's fear-mongering. That helps by brainwashing certain people to think, oh yeah, we're going to go into war, let me go and buy food supplies. And that works on a lot of people, to be fairly honest. But that also affects the market space, because then people are thinking to themselves, why am I investing money into the market if the World War III is about to be happening? So that causes disruptions towards the market space as well. But yeah, in the UK today, they decided to fearmonger, and essentially they used the Daily Mirror official news TikTok page to post World War III starting in the UK. Everybody go and buy food supplies and water for at least a few days. Are they going to be playing the same scenario in other countries, inside of the EU especially? Probably, if the UK is going to do it. Otherwise, why is the UK only going towards World War III? Nobody else is. But I'll be honest, with this current government we have in the UK, nobody knows. Nobody knows what they're up to. I'll be fairly honest. The current government we have in the UK, we need Trump so bad. Honestly, people in America don't understand how good they have it by having a leader that cares for their citizens' safety. You honestly have no idea how good you have it in the United States when you have Trump as the leader of your country, because we would do anything to have a leader like Trump in the UK to fix this country. Anything just to get Trump over here. Or somebody like Trump to fix the United Kingdom, because we need somebody like him so bad. So honestly, the people that are hating on Trump right now in the United States, they have no idea how good they have it, where they have a leader that cares about their safety and cares about everything else, and is so patriotic towards their own country. Now, but yeah, in the UK right now, they're saying World War III starting, which is causing a fear-mongering situation, which could have implications on the market moving forward. A lot of scenarios to push the market in every direction. But again, going forward, we know what's going to be happening. We know that the regulations are coming. We know that the institutions are coming. We know that more institutions are coming. More banks are getting involved. We know also that utility is coming. We know decoupling is happening. We know ETF altcoins are happening this year. So there's a lot of things going forward that are extremely positive. But before we get to those stages, there's going to be some ups and downs. And those ups and downs, the house is going to win in between. The house is also going to win in between after the regulations and so on. But the more we go towards utility, the more difficult it's going to get for certain crypto projects to come back down. Now, Standard Chartered Bank is what we're going to talk about next. Before we talk about Standard Chartered Bank, let's go inside the comment section first. Let's see where we're at. We were at, let's see, we were inside the comment section. We were at, would Michael Saylor be better off setting up his own BTC mining warehouse? Probably. I'll be honest, if Michael Saylor set up his own Bitcoin mining farm, it would make a lot more sense. Happy Pisces, good to see you as well. How you doing? How you been? I saw that World War III post from the Mirror. I just swiped over it. Let's go, Joe. Even if I was a CMF Pierce, good to see you as well. How you doing, bro? How you been? Now, Standard Chartered Bank has came out with a interesting, essentially, report, you could say, which is they're saying Ethereum is cheap still to buy. Standard Chartered, led by essentially an analyst from Standard Chartered, led by Jeff, recently labeled Ethereum and ETH treasury firms as cheap at current valuations, following institutional buy-ins and aiming for ETH to reach $7,500 by year's end. Jeff analysis highlights streak investment opportunities amidst ETH's price dip, projecting significant gains and potential stability as treasury holdings may rise to 10%. Standard Chartered's digital asset team, led by Jeff, essentially describes Ethereum as ETH treasury firms as undervalued. Kendrick essentially predicts $7,500 price tags, leveraging strong treasury acquisition data. He stated Ethereum and treasury companies are currently undervalued and price levels. He also, analysis shows that treasury companies and ETF accumulating 4.9% of Ethereum's circulation. The bank's forecast aligns with historical Bitcoin accumulation patterns. This includes significant treasury purchases. The outlook and sensitives institutional investments reflect Ethereum's strict role in portfolios, essentially emphasizing ETH's timely acquisition by treasury firms. Potential financial outcomes hinge on Ethereum's entry points, creating an attractive investor environment. Strong institutional and ETF engagements hint at growing treasury influence on the crypto market space. The rapid treasury accumulation of Bitcoin in previous cycles highlights a similar trend for Ethereum. This pattern suggests robust institutional demand, and analysts from essentially Standard Chartered Bank, mainly Kendrick, coming out with this report suggesting that Ethereum is still cheap and that Ethereum treasury firms are undervalued. The idea that Ethereum treasury firms are undervalued if they're public companies and they have stock prices essentially on the stock market, then sure, they might be undervalued but to be fair, too many companies have jumped on the bandwagon of creating crypto treasuries just to boost essentially their company price value on the stock market. But the idea that Ethereum is cheap in itself, no. Look, Ethereum is going to go higher, no doubt about it. Ethereum will go higher prices, will reach higher prices. But the idea that it's cheap, no, XRP is cheap, XLM is cheap, XDC is cheap, HBAR is cheap, AVAX is cheap, Solana is cheap, Cardano is cheap. But the idea of Ethereum sitting in thousands of dollars is cheap. No, it's not cheap. The average person is better off going for the assets that I just named now than going for essentially $4,000 plus asset, where you could buy one Ethereum, or you could buy essentially a quantity amount of Cardano, XRP, XLM, XDC, HBAR, Solana, and so on. So that I would suggest is better to do than going for one Ethereum. One Ethereum is going to do you absolutely nothing. Absolutely not. Maybe in a million years, you might be able to turn over a profit if you have one Ethereum. But if you take the same amount of money that you're going to spend on one Ethereum and go for XRP, XLM, XDC, HBAR, Cardano, and so on, you'll be a lot more better off. Not financial advice in any sort of a way, but that's what I essentially would say. Now, Kraken is what we talk about next. But before we talk about Kraken, let's go inside the comment section first. Let's see what's happening there. Let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the Kraken news. We were here, Park Dong. So can you write your comment in English, please? Because I don't have the option to translate because I'm using a third-party platform to be able to go live on YouTube and X, and the platform that I'm using doesn't have translate. So there's a possibility, Park Dong. So if you can type your comment in English, I'll be essentially able to help you out more. I find it very funny how they call ETH and Bitcoin cheap, which they are not facts. But no one is calling XRP and XLM cheap, which they are. I almost got lured into buying. Absolutely facts. You know what Kamal has just said, or Coiny State X has just said, is facts. I know for Sweden government saying that there are citizens to prepare for a war about 2 years. I don't get used to follow you on your live on X, but it's the first time we reach more than 145 visitors? No. Unfortunately, I don't know why, but Restream is showing the wrong viewership count. So, Carl, yeah, it's showing I have 28 viewership. I don't have 28 viewership. I have more than right now. We have more than 28 people watching us, but for some reason, Restream is showing 28, and it's just frozen there. I don't know what's going on. I have crypto.com always on point, Miles. Let's go, Christopher. I have a crypto.com account. Do you think I should hold some CRO? If you want to, but I would still suggest XRP, XLM, XDC, and HBAR above that, even Cardano. Hi, Miles, the CMF family, XRP Den. Good to see you. How you doing? How you been? Now, Kraken. Kraken is about to have a sit down with the SEC regarding tokenization, because that's what's coming next. Even though that the brokers essentially don't like the idea of tokenizations and the banks don't like the idea of companies like Ripple getting bank licenses, it seems that the SEC doesn't care. The SEC is still going forward with tokenization, and the OCC isn't listening to the banking associations. So here it is. The meeting disclosed in a regulatory memo underscores how quickly the idea of tokenized stocks has gone from a niche experiment to a regulatory flashpoint. Tokenized equities allow investors to trade shares around the clock, sidestepping the restrictions of conventional essentially exchanges. Advocates argue that this could open markets globally, but critics warn that the same flexibility also strips away investor safeguards. Industry associations have recently urged US regulators to take a harder line, worried that essentially the products resemble unregulated securities more than stocks. The only reason that some broker associations are coming forward and saying that tokenization is bad for the stock market is because they're going to lose their jobs. The brokers that essentially sell these stocks are going to lose their jobs, and that's why they're coming forward and saying tokenization is bad. My suggestion would be, instead of crying about it, that the world is changing and the financial sector is changing, how about you adapt? That will do you a lot more better than crying on the sidelines and sending letters to the SEC telling them to stop the tokenization or make it harder for tokenization. Why do you have to be difficult? I don't understand why the brokers have to be difficult, why the banks have to be difficult. Why can't they just adjust and get on board? Yes, I understand the fact they're going to lose a lot of money in fees, and I understand that they're going to essentially lose their monopoly. But it's time for them to lose their monopoly that they have over the market space, to be fairly honest. Kraken rolled out tokenized stocks in May, initially for essentially for non-US users. Before expanding the services to run on the Tron blockchain this week, Robinhood followed with a similar launch in Europe, signaling essentially that the competition is already building. At just $360 million in circulation, tokenized stocks represent a fraction of the $26.5 billion in tokenized real estate world assets. Yet exchanges are betting on the sector could eventually scale into trillions. Binance researchers estimate that even if 1% of the global equities market migrated on-chain, tokenized stocks could surpass $1.3 trillion. Kraken's own survey suggests that investors are receptors, and 65% of respondents who own both crypto and equities expect digital assets to outperform traditional stocks over the next decade. Kraken executives argue that tokenization isn't just about replicating Wall Street on blockchain, it's much more. In fact, it is. The idea that the stock market is going to become 24/7 is just going to add more liquidity towards the stock market. Yes, it will add more liquidity to whichever chain is chosen, but it also adds more liquidity to the US markets. It adds more liquidity to Wall Street, to the London Stock Exchange, and the list just goes on, which is better for those exchanges to be accessed 24/7. Yes, the market space might become more volatile because anybody can buy and sell at any time of the day. But we've been experiencing that inside the crypto sector for the longest time, to be fairly honest. Now, banks of Russia is what we talk about next. And moving away from tokenization and the amount of brokers right now who are sending letters to the SEC and literally crying to themselves about how the SEC should make things much more tougher for tokenization inside the United States. They just got to realize that the old ways are gone and that the Biden administration is no longer here to help them out. The Biden administration is no longer here to help the banks have a monopoly over the American citizens or any citizens. The Biden administration is no longer here for essentially the brokers to have a monopoly essentially over the stock market. All of that is crumbling and coming crashing down. The faster the banks realize it, the faster the brokers realize it, the faster that Wall Street realize it, the better it is. I mean, we can all move forward essentially. But the idea of sending letters back and forward, or just essentially the idea of sending letters to the OCC or the FDIC or the SEC and crying about, oh, I can't believe the blockchain firms are coming in, getting bank licenses, Fed accounts, tokenization. How could this possibly happen? You must slow them down. You must not let them essentially let this happen. You must not let people earn money on their stable coins. I'm sorry, but the banking monopoly and the broker monopoly has to come crumbling down, like the Berlin Wall, to be fairly honest. Now, Bank of Russia. Bank of Russia prepares stricter rules for crypto operations. Russia has a weird way, but it shows that they are willing to create some sort of regulations. It might be stricter, but they're still showing their willingness to create regulations for the crypto space moving forward. Russia is very big on CBDCs, not so much on cryptocurrencies. Yet, when America takes every footstep forward, China and Russia are noticing and are deciding to slowly get involved. China is using Hong Kong, essentially their province, to experiment with the blockchain space and regulations for essentially tokenizations, for stablecoins, and so on. Russia in itself is using Kazakhstan essentially to experiment with blockchain technology. But here's the recent news that's come out today out of Russia, and they will also provide a lot of liquidity towards the blockchain space if they essentially are able to move fast enough, to be fairly honest. Russia's monetary authority is going to impose new requirements for crypto-related operations to allegedly reduce the risk for banks involved in their processing. The regulator has already informed dozens of concerned institutions about the planned regulatory changes, urging them to essentially treat such transactions in the meantime. The Central Bank of Russia intends to adopt a specific rules to guide banking organizations with essentially working with digital assets. The official TASS news agency reported, these are necessary to minimize risk for commercial banks and their customers stemming from crypto operations. The authority urged, also quoted by Russian crypto news outlets bits.media from Russia. The regulations will determine capital requirements and introduce standards for both direct and indirect investments in cryptocurrencies. Expected in 2026, the new rules will also apply to crypto-based financial instruments purchased or issued by the banks themselves. Similar requirements will be essentially put into place for loans issued to crypto companies. The media reports revealed, also citing the Bank of Russia's reports on the development of banking regulations and supervision. The CBR has already informed market participants about its plans. It advised 97 banks to adapt to a conservative approach when assessing their risk of operations involving crypto assets. The regulator also suggested they should provide full coverage of nominal values of cryptocurrency instruments and limit them in more than 1% of their capital. Among financial essentially regulators in Russia, the CBR has been the strongest opponent of legalizing operations with decentralized cryptocurrencies like Bitcoin. However, heavy Western sanctions that restricted Russian access to global financial channels essentially convinced the banks to allow limited use of crypto in foreign trade. Earlier this year, the Monetary Authority proposed a special experimental legal regime for cross-border essentially cryptocurrency settlements. Nonetheless, it's still against crypto payments inside the country, then aimed growing Russian essentially crypto holdings already exceeding $25 billion, as reported by Cryptopolitan. The Bank of Russia permitted crypto instruments in May. While digital assets are only accessible through derivatives and available to a limited group of highly qualified buyers, Russia has essentially invested $60 million in Bitcoin futures in less than a month after the CBR authorized financial institutions to offer such products on Russian markets. The central bank is now under essentially increasing pressure to soften its stance on crypto, given that ordinary citizens are finding ways to acquire and trade coins anyways. Last week, a group of lawmakers urged its management to facilitate the establishment of a network of legal crypto exchanges, a move that would effectively legalize trading cryptocurrencies in the Russian Federation. The members of the essentially state Durham, the lower house of Russian essentially parliaments, insisted that it would reduce essentially illegal crypto circulations on that matter in the country and increase trust in financial institutions. The Russian deputies also proposed a mandatory requirement for the minimum size of authorized capital of operations in these trading platforms to make sure that they are financially stable. Earlier this year, Russia's finance ministry, which has been generally more open to decentralized digital money, unveiled that it wants to create a cryptocurrency exchange for qualified investors in collaboration with CBR. Bank of Russia has plans to enforce stricter rules for crypto operations next year, comes weeks after the monetary policy regulator set to dates for gradual launch of a digital ruble CBDC coming towards Russia. The state-issued coin, the third essential section of the national fiat after cash and bank money, will be introduced to the public in stages starting September 1st, 2026. In recent months, Russia has been amending various laws suffocating crypto usage in what looks like an apparent attempt to clear the ground for its own central bank digital currency. So it seems like businesses in Russia want to go towards cryptocurrencies. The Russian government wants to go towards CBDCs, and they're trying to create a strict environment for cryptocurrencies for the retail section to go towards cryptocurrencies because they want to launch their CBDC, and that way they can have control of the market space. They can't have control of the market space if it's cryptocurrencies, but they can if it's CBDCs. So Russian government is weighing in towards CBDCs. Russian businesses and some political parties are weighing in towards cryptocurrencies. So far, there's about $26 billion of liquidity that's entered towards the market space from Russia itself, from qualified investors. 16 million of that is towards Bitcoin, but $26 billion in general. That's a lot of liquidity from a country that's sanctioned. Imagine if it wasn't sanctioned. All they need to do is pretty much end that war with Ukraine. But putting that to one side, Russia seems like it's on a 50-50 situation. They are leaning more towards CBDCs, but on the other side, they're also, the government, some political parties and businesses are leaning towards cryptocurrencies. Who's going to win this battle of CBDCs versus cryptocurrencies? It's going to be both. Both will be accepted, but CBDCs will be pushed heavily a lot more in Russia than essentially cryptocurrencies. We know how much of a restrictive country it is, to be fairly honest. Now, moving away from Russia adding $26 billion of liquidity towards the crypto space so far, even though they're sanctioned, towards Gemini, which is the crypto exchange, which has been giving out XRP bank cards, which we talked about yesterday. Before we go through that news, an update on that matter, let's go inside the comment section first. As previously, this is live, which means if you do have any comments or questions, put it down in the comment section. More than happy to help you out. Let's see where we're at the comment section. Hi, Miles, the CMF. No, okay, we read that one. Thanks, Miles. No financial advice. No problem. Call anytime. Any news on PayPal using XRP, or is this false? Thanks, Miles. XRP and PayPal, no, it's fake news. Miles, I was wondering if the Vatican will go for creating its own digital money and blockchain. Will the Vatican create its own currency? Possibly, yes. Will people buy it? Yes. Should you buy it? I wouldn't buy it. I'll be very honest. The idea of buying any religious coin is wrong, to be fairly honest. There should never be a religious crypto project, because that's just wrong in many eyes. Because it's an abuse of faith, you could even pretty much say. So should the Vatican create their own cryptocurrency? No. Should any religion create a cryptocurrency? No. In my point of view, no religion should create a crypto project, because that's just wrong. Because if it goes south, then that's very bad. And they're essentially, making money off the back of the retail section that is a follower of that religion, which is wrong, because they're supposed to be, people who are supposed to be faith leaders, for example. So that's wrong in my point of view. If the Vatican decides to do that, or if any religious group decides to do that, that's just extremely wrong and should not happen. But can they do that? Yes, if they want to do, they can. Sorry for my grammatical mistake. If the Vatican would create its own crypto would create its own crypto, they can if they wanted to. Should they do it? No. No religion should create a crypto project. Do you think when the XRP spot ETF get approved, it will cause a supply shock? Yes. No supply shock, no, because there's still a lot of tokens. Supply shock, no, but it will essentially help with price movement tremendously over time. Yes, 100%. Supply shock will come over time, not overnight. Now, Gemini, the crypto project that's been handing out XRP bank cards, which is only available in the United States, if anybody's thinking about getting one. Well, Gemini today has surpassed Coinbase. Gemini, the cryptocurrency exchange founded by the Wangwells twins, has made a bold move in the competitive crypto markets. The exchange also essentially overtook Coinbase in the US App Store after they introduced an XRP new rewards credit card in partnership with Ripple Labs and MasterCard. Sensor Tower also essentially shows Gemini ranked at 16th, essentially in the finance category, of Coinbase ranked 20th. This move is essential considering that Coinbase boasts of essentially much more far larger volume of trades. According to Missouri data, Coinbase handles more than 3 times the trading volume of Gemini, yet Gemini was able to go rank higher in terms of downloads on essentially the American App Store, much more higher above Coinbase, just because they launched an XRP essentially rewards credit card. I mean, it just shows you what happens when you give XRP an inch, it takes a mile. Honestly, this is why if we get an XRP ETF, we're going to do the price is going to obviously be impacted on a positive note going forward. It just shows you, just by adding an XRP credit card, Gemini Crypto Exchange went from 20th place to 16th place. It's ranking above Coinbase just because they're offering an XRP bank card. Imagine the amount of XRP ETF applicants there are, which are a lot more than HBAR ETF applicants or Cardano or Solano or so on. XRP has more ETF applicants. Just imagine how many people are waiting to buy those ETFs right now. Just by adding a credit card XRP to your exchange app, it boosts your exchange app on the US stock market, essentially on the US App Store. Imagine offering ETFs now. Gemini's surge in ranking also comes at a time when XRP is gaining broader recognition in the global financial sector. Recently, Coin Bureau shared essentially a post highlighting the Chinese fintech giant LinkLogix is essentially integrating the XRP ledger into its trillion-dollar supply chain finance platform. If you didn't know, now you know. This action will enable XRP to take essentially center stage in cross-border payments, trade finance, and handling of real-world assets. The increasing essentially popularity of XRP is helping projects like Gemini's reward card. As the cryptocurrency continues to gain more use cases, despite its recent success in the app rankings, Gemini is obviously still in major competition with Coinbase, yet just by offering an XRP credit card, it was able to climb past Coinbase in terms of downloads. Gemini also plans to make an IPO, and it has registered its shares on the Nasdaq, where it is expected to trade GEMI, their token essentially, their ticker. This step, which is supported by other big banks like Goldman Sachs, Citigroup, can enhance the influence of Gemini in the crypto industry even more. The recent growth of Gemini shows that essentially it can further compete with leading players inside the crypto market space just by offering an XRP credit card. And that one major Chinese company that's essentially come forward decided to use XRP and make it a center stage of essentially a center stage of tokenization is massive, to be fairly honest. Absolutely massive. I mean, the amount of news that's coming essentially to this, the Chinese fintech giant LinkLogix is integrating the XRP ledger into its trillion-dollar supply chain finance platform. This is why I say, we know what's going to be happening going forward. Going forward is utility, regulations, tokenization, licensing, institutions, banks, governments, liquidity. Going forward is all of that. So we know where the market's headed. Is extremely on a positive note. In between, we're going to have the house win, and then we're going to go up, then the house wins, and then we're going to go. And at one stage, utility is going to take over so much for certain tokens that it's going to be difficult for them to come back down at certain price points. But that's not overnight, it's over time. Now, Moving on to more XRP news, the CME crypto futures, also on the topic of essentially, imagine if we had an XRP ETF. Because just by having XRP futures, this is what happens. CME crypto futures tops $30 billion as XRP hits $1 billion, fastest ever. XRP futures have reached a historical milestone, essentially at CME Group, crossing $1 billion in open interest within just 3 months. This marks the fastest time any contract in CME's crypto suite has hit this benchmark. As per the CME Group post on X, the move positions XRP alongside Bitcoin and Ethereum, where institutional money has essentially long-shaped market liquidity and trading depth. CME confirmed its crypto suite surpassed $30 billion in open interest, with XRP futures leading the latest surge. Besides XRP, both Solana and Ethereum options crossed $1 billion, but XRP's speed stands out. Nate Gressy, essentially ETF analyst, noted CME Group says XRP futures contracts have crossed over $1 billion in open interest, fastest ever contract to do so. He added that there are more than $800 million and already essentially parked in futures-based XRP ETFs, hinting a stronger demand for a XRP spot ETF is on the way. Hence, the path mirrors Ethereum's trajectory before essentially its ETF boom. An XRP futures open market had the fastest ever to reach $1 billion. And they're suggesting that there is money on the sidelines waiting for an XRP ETF to happen. If an XRP futures can get to that figure in that amount of time, in under 3 months, which is the fastest ever, imagine what an XRP ETF can do going forward. Moreover, some see $1 billion as more than a number. Analysts will essentially have come forward and explain that $1 billion is a kind of a big leagues for liquidity. It means enough institutional money is parked that spreads tighten, risk desks actually care, and pricing starts to behave like the way essentially it is for BTC and ETH. XRP's acceleration suggests major funds are allocated in real size, not just experimenting with small exposure. Additionally, the milestone comes as Ripple expands its ecosystem. The launch of RLUSD into Ripple's new stablecoin alongside XRP ledger tokenization projects and alongside essentially XRP signals the infrastructure is aligning for institutional interest. Hence, the growing liquidity in derivatives could prepare for larger market products. XRP's futures growth shows a deepening institutional adoption. However, history shows sharp correlation often follow, marking timing and risk management critical. XRP futures broke records. $1 billion, the fastest the CME's ever seen before. The fastest, reached $1 billion. It's an indication that the moment we get XRP ETFs, there is a huge lump of money sitting on the sidelines waiting for XRP ETFs to be approved. And since Eric and James said 95% chance of approval this year for XRP ETFs, you can see where the market's heading. This is why I say we know going forward where the market is going. Going forward, it's all about the regulations. It's all about the banks, the institutions, the licensing, the liquidity, and most importantly, the utility going forward. We know what's going to happen going forward. Also, just want to add one more thing on that. There is a rumor going around. Now, I'm not very fond of rumors. Some tend to come out true, majority don't. But there's something going around which just want to make you aware of. It's not confirmed by any means whatsoever. Which is rumors of a partnership between Apple and Ripple. Now, hear me out. This is what the rumor is about. No one has noticed this until now, today. According to a subdomain tracker, Apple has created a new subdomain called ripple.apple.com. There is a subdomain, ripple.apple.com. This development has led to speculation that the tech giant Apple is planning a possible integration into the XRP Ledger ecosystem. Currently, no further details about the development. Assessing the site doesn't reveal any specific pages. There is also speculation that this development could be related to Apple Pay platform. Cryptocurrency exchange Gemini recently launched an XRP themed credit card, which we talked about. So just wanted to make you aware of that. There's not much news about Apple and Ripple whatsoever. There's no confirmations, there's no announcements, there's no nothing. All there is a subdomain, which technically only Apple can create, in a sense, because they buy their own domains, which means they could create their own subdomains. So ripple.apple.com has been created. Not today, been created a long time ago. But the tracker was essentially revealed today. And it's suggesting either XRP Ledger integration or XRP for Apple Pay. But there is a subdomain of ripple.apple.com. Apple wouldn't create a subdomain for no apparent reason. It's a $1 billion company, $1 trillion company. They wouldn't create a subdomain for no reason. So there has to be a reason behind it for ripple.apple.com to exist. If it is by Apple, if it is essentially by that sense. Just want to share that with you. There's no confirmation whatsoever from either party, Apple or Ripple, on that sense. Just want to share it with you if it does become a reality at the end of the road somewhere. It's been said here. Also, on that note, we have reached the endings of tonight's live. This was episode 361 of the CMF Live. We're 4 episodes away from 365 episodes. And once again, if you're worried about the market space, don't be, because what's coming ahead of us is going to be an incredible ride, an incredible journey with regulations, banks, institutions, Trump's administration, ETF approvals, most importantly, utility decoupling. But yeah, this was the endings of tonight's live. This was episode 361 of the CMF Live, 4 episodes away from 365 episodes, which is incredible if you think about it. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards. In this live, we talk about cryptocurrency news, CBDC news, AI news, political news, essentially regulation news. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So let's go through the comment section just in case there are questions before we do go, obviously. Do you think... No, I read that one already. Hi, Miles and CMF members. I hope that is a good day. Long day at school. Scott, good to see you as well, brother. How you doing? Tune towards the end. Hope you had a great day, Scott. Miles, I think institutions, thank you so much, Ian and Carl and JP, for filling the chat with those emojis, because I saw what the comment was about. Thank you so much for that. Miles, I think the institutions are trying to push out the retailers big time before XRP truly takes off. Yes, and also sometimes retail people tend to push themselves out as well. But yeah, I agree. What about XLM, XDC, and Beam? All great projects. Bright futures ahead of themselves. XLM, bright future, XDC, bright future, Beam in the gaming sector, it has a future for itself as well. I would just like to thank you, Miles, for your time and fantastic information that you share with us. XRP Den, thank you so much for the kind words. An XRP ETF will blow Bitcoin ETF record out of the water. I agree, 100%. 100%, I agree. Apple and Ripple have been working together for quite a while. Thanks for all the news. Have a great night and see you tomorrow same time. Let's go autistic. See you tomorrow same time as usual. Night, Miles and CMF. Pablo, see you tomorrow same time as usual as well. Thanks, Miles, for a great show. Good night, everyone. Bull XRP. See you tomorrow same time as usual. Good night, Miles and all CMF. Thank you for a great live and news. JP, see you tomorrow, but same time as usual. After all the good news on XRP, do you think the price will ever move? Yes, funky brother. Give it a little bit of time. It will. Thank you, Miles. Mike, see you tomorrow, but same time as usual as well. Thank you a bunch, Miles. Have a lovely night. Oh, let's go, Lena. See you tomorrow, sometimes usual. Mike, let's go, brother. See you tomorrow, sometimes usual. Thanks, Miles, for your great live tonight. I will go to sleep with more knowledge on crypto markets. Let's go, Carl. See you tomorrow, sometimes usual, brother. Thanks, Miles. It's all about utility. Let's go, XLP and facts. Good night, Miles, and good night, CMF. Let's go, Funky Brother. See you tomorrow, sometimes usual as well. Good night, Miles. God bless. Let's go, Cali. See you tomorrow, sometimes usual. Night, Miles and CMF. Thank you for amazing live. Let's go, Joe. Feeling up to date. Thanks, Miles. Let's go, Susie. See you tomorrow, sometimes usual. Hey, buddy. Abdul, I'm good. Good night, Miles and family. Great live. Many thanks for all you do. See you tomorrow, Ian. See you tomorrow, sometimes usual. Good night, Scott. Oh, funky bird said. I will see everybody tomorrow, same timing as usual. Everybody have a great day, great night, depending on where you're around the world. Also, once again, thank you so much to everybody who has liked and retweeted this live show on X. Thank you so much to everybody who has liked on YouTube. If you haven't, please like, please retweet, please subscribe and follow if you already haven't. I will see everybody tomorrow, same timing as usual. Thank you, Miles. Stormy, let's go. See you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual. Love you. Like, follow, retweet, subscribe, and comment if you already haven't. Thank you for the great job, Miles. Have a good night. Oh, I'll see you tomorrow. Carlos, see you tomorrow, same time as usual. Stormy, see you tomorrow, same time as usual. See everybody tomorrow, same time as usual.